Joe, welcome to Floor Talk. It's great to have you on the show.
Oh, thank you for having me.
My pleasure.
Yeah.
So Joe, in your upcoming book, you suggest there's an 80% likelihood that our economic future will look fundamentally different from today.
Yes.
So can you elaborate on what that means and how it relates to the current macroeconomic landscape?
Sure. I mean, again, what I think is the important conclusion is that what most investors, economists expect for the next 5 or 10 years would be roughly 2% growth, 2% inflation. It's what some call consensus or status quo. And what our research, startlingly tells is that because of the push and pull between two primary forces, structural deficits or fiscal deficits on the one side that would push growth down and inflation up, versus the potential for AI to lift growth and keep inflation down, it's that tug of war that will manifest over the coming years that will push us in one way or the other. And that's really the startling insight.
Now, what are the implications for everyday investors? Is there a new balanced portfolio?
I won't say it's new. It depends upon how you want to mitigate these risks. I mean, obviously, if we would have AI just not be as transformative as we would hope, you'd have an environment of materially higher interest rates than we have today. Like a 10-year treasury yield, for example, could go from 4% to 6%. Higher income, but potentially some volatility there. It would also mean equities or stock market would struggle in that environment. And so there's a way you can kind of hedge your portfolio if you're willing to take a little risk. And that would be tilting to parts of the market that are less technology centered, as well as overweighting modestly fixed income, believe it or not. I think those two factors alone, not wholesale changes to your portfolio, really increase your odds of protecting against downside loss should we go in the more negative environment.
Finally, Joe, what are key lessons for policymakers, leading companies, and central banks?
Well, I think for policymakers, it really is some of the attention we're seeing now, which is on our fiscal deficits and trying to bring them down over time. For the United States, that's, I think, in our judgment and my assessment, it's the biggest headwind we will face, despite even some of the recent headlines around tariffs. I think for business leaders, it's the ability to harness AI in a productive way. It's also a lesson for workers. It's not all negative automation for all jobs. That's not our assessment. There's potential for augmentation too. So it's going to be how we harness as workers AI, and if we do so, corporations will benefit. So it's optimistic on the AI front. It's more optimistic than what some of the negative headlines would have you believe.
All right, well, Joe, congratulations on the launch of your book. And
Thank you.
Thank you for joining me on Floor Talk today.
Thank you for having me.